You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
This is the Options Industry Council's Wide World of Options. Before we start today's show, investors should know that options involve risk and are not suitable for all investors. You should not enter into an options transaction until you have read and understood the risk disclosure document, characteristics and risks of standardized options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Multiple leg strategies involve multiple commission charges. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as a recommendation to buy or sell a security or to provide investment advice. Welcome to the Options Industry Council's Wide World of Options. OIC was created in 1992 to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. OIC offers a variety of resources to those interested in learning more about options, including live seminars, webcasts, and podcasts. Check out www.optionseducation.org for more information. Now here's your host, OIC's Director of Retail Education, Joe Burgoyne.
Welcome to OIC's Wide World of Options. Thanks for joining us for today's show. Let's get started first with Strategy Spotlight.
It's time to break down the latest option strategies. It's time for Strategy Spotlight.
Joining us today on Strategy Spotlight is Bill Ryan, Managing Director at NYSE Options. Welcome, Bill.
Hey, thanks, Joe. Welcome.
I appreciate you taking time out of your day to talk to our listeners about a new product that you'll be adding soon, the binaries. How about if we start by defining exactly what a binary option is for our listeners?
All right, Joe. First, let me just say again, thanks for having me on the show. Always enjoy talking to you. A binary option is an option that has one of two outcomes at expiration. The option will either be worth $0 or $100. Again, at expiration, it cannot be worth any more than $100. It can't be worth anything between 0 and 100. It's either 0 or $100 at expiration. Two outcomes, binary, that's it.
Interesting. So, why is NYSE about to offer these binaries? I mean, I guess you feel there's demand out there?
Well, we've had conversations with a number of customers over the years, and we feel like customers are looking for something that has two qualities. It has a defined risk, and it has a defined reward. And binary options have been around in the over-the-counter market for years, and we thought it was time to bring that over-the-counter market, that over-the-counter ability to the individual investor in the listed options world.
Well, there sure is defined risk and reward when you're talking 0 or 100. Pretty interesting. So are there others out there who list binaries at this point? Is there competition?
Well, Joe, there's no real competition for what we're about to do, but there are binary options out there, and Nadex is another exchange that has binary options listed. Now, Nadex is a CFTC-regulated entity, and their binary options are on foreign currencies, commodities such as oil and gold, things of that nature. We will be the only listed options exchange in the U.S. to offer binary options on equities and ETFs.
Okay, interesting. So, a whole new frontier, really.
Yeah, oh yeah.
Well, let's talk a little bit about, the differences. I mean, I think the whole idea with Wire World of Options is to, educate people on different things that are going on in the business. So we've got the binary option that you've clearly explained. It's worth 0 or 100 at expiration. That's it. Why don't we talk a little bit about some of the nuances and, importantly, the key differences between standard listed options and these binaries?
All right. So aside from the maximum value at expiration being 0 or 100, settlement is a huge difference between the binary and the listed world, the standard listed world. A standard option, is based on the closing price of the underlying stock. And if you take, for example, a call option, if you're long a call, as the stock goes higher and higher, the call goes deeper and deeper in the money, and the option can be worth more than $100, and it's worth its intrinsic value at expiration. Well, with the binary, it settles on a all-day expiration day VWAP. Now, VWAP is a volume-weighted average price. So we calculate the volume-weighted average price of the underlying security from the time it opens until the time it closes, and settlement is based on that VWAP.
Oh,
now,
that's wow! Yeah, that just. I think we're going to have to go through that, with some examples. I didn't mean to cut you off. You said the thing we need to understand. Go ahead.
Well, yeah, the thing that you really need to understand is that at expiration, the VWAP can be different than the underlying stock price. And if it's different, that would mean that, the call could be in the money and the finish high binary could be out of the money, or vice versa. So the VWAP, as I said, is based on the trading that takes place during the course of the day.
Okay, so let's give our listeners an example. We got a $20 stock that's trading all day long. Talk to me about VWAP versus closing price with an example or two.
All right. Well, I have one written down, Joe. A little bit different than the $20 one you were talking about, but
no, we have to do $20, Bill. No, I'm kidding.
So let's talk about a 7-trade VWAP. And now you know that, of course, a stock will have thousands, if not hundreds of thousands of trades during the course of the day. But this should make things relatively simple. So if we take a trade of 8,000 shares at a price of $24.99, that has a total value of $199,920. So that's just the share prices times the shares times the price. So if we go, the next trade is 100 shares at $25. That's a value of $2,500. The next trade is 1,500 shares at $24.98. That's a value of $37,470. The next trade is 1,300 shares at $25. That's $32,500. The next trade is 300 at $25.02. That's $7,506. The sixth trade is 2,500 at $25.01. That's $62,525. And the last trade today is 400 shares at $25. That's $10,000. So we've traded a total of 14,100 shares with a net value, when you add all those values up, of $352,421. So you see, we added all the shares and took all the values, added all the values. Now, to get the VWAP, we divide the value by the shares. So 352,421 divided by 14,100 gives us a VWAP of $24.99. Now, that last trade, that 7th trade a day, was the closing price of $25. That's different than that VWAP, and that's an important distinction when you trade the binary versus a standard stock option.
Yeah, critically important. I mean, it's going to tell the holder or the seller whether they're collecting money or not. I mean, that's critically important. So is there like a tape for the value of the VWAP over the course of the day?
Yeah, Joe, they're going to go out over opera like regular options do, and what you have to do to follow the bird is look for the bird symbol. So that symbol will be different than the underlying stock symbol. For example, Apple would be AAPL, but the binary would be APQ. So if you would use APQ in your option chain, you'll see that VWAP as is calculated throughout the day, and you'll be able to track the VWAP versus the underlying stock price if you choose. But average, the ordinary investor would probably just look at the VWAP and follow that for the course of for the life of the option.
And throughout the course of the day, there's going to be a market in that binary. Yes.
Yeah, we'll have market makers on the floor making options on the birds, just like they do on the standard options.
Okay.
And as I said, you'll be able to that price, that VWAP, will be calculated and disseminated at least every 15 seconds every day. Probably more than that, but at least every 15 seconds every trading day.
And do you have a sense for how many products you're going to offer binaries on when you launch?
Well, we do have some listing requirements that we have with the SEC. So right now, about 80 names qualify to have binaries, and you can imagine they're all the big names. Joe, it's Apple, it's SPY, it's the IWM, it's Intel, it's all the big names. When we launch, we'll probably launch with about 15 or 20 the first time, then roll it out, 3 or 4 consecutive weeks after that.
Okay, very good. So obviously you guys have done your homework. You think there's a demand for this out there. The average option user, you think, may have an interest in this?
Yeah, and Joe, we talked about defined risk, and I believe people that like to sell options to put money in their pocket will like the binary because of the defined risk. Now, a simple thing for people to think of is to think of a binary as a one-point vertical spread. So a one-point vertical spread would have a maximum value at expiration of $100. Now, it can have something in the middle between 0 and 100, which the binary can't. But you can think of a binary option as a one-point vertical spread. So if you sell it, you can't lose any more than $100. The same as if you sold a one-point vertical spread. You can't lose any more than $100.
I like that example, and I'm a big fan of verticals as well. So it's a good explanation. Are we missing anything? Have we covered all bases on the binaries here?
Just a couple of things for people who are interested in trading them. We're going to have 5 weekly expirations. So 5 Fridays in a row, we'll have a binary expiration. So, for example, if we started trading these with the first expiration November 6th, then it'd be the 13th, the 20th, the 27th, and then December 4th. So we have 5 Fridays in a row where we have expiration. We're also going to offer binaries in dollar strike prices, and they will trade in penny increments. So the dollar strike and the penny increment may be different than the underlying. So you might see some different strike prices with the bird compared to the underlying stock.
Well, that's dynamite information. Wish you a lot of luck with the launch. I mean, it'll be interesting to see how quickly they catch on. I mean, if we remember the weeklies. The weeklies, were launched some time ago, and nothing much happened. And now look at the weeklies. They're new weeklies all the time, and they're the most liquid products in the world. So we hope you have the same success with the binaries.
Yeah, we think like all products that launch, they may be a little slow at first. I would caution people to trade on day one to be a little careful because, it's a new product. People are learning them. There may be somebody out there who's trying to take advantage of people who don't understand the product as well. So I would tell people just be a little cautious, in the beginning. Get to understand the product, get to understand how it works. In particular, pay attention to that VWAP at expiration. And remember, 1 penny above or below is going to make the difference of whether you make money or, you close at $100 value or you close at 0 value.
It sure will. Well, Bill, always great to talk to you. Appreciate you offering your expertise on the binaries, and good luck with the product.
Thanks, Joe. Appreciate it. Take care.
It's time to meet the movers and shakers from the world of options. It's time for Profiles and Perspectives.
Joining us today on Profiles and Perspectives is Brian Overby, the options analyst at Trade King. Brian, welcome, and thanks for joining us today.
Well, it's great to be here. Happy to join you anywhere, Joe.
Well, we don't see one another often enough, but the OIC conference is an opportunity, and let's get into some conversation about your firm, Trade King. What's new and exciting?
Well, actually, we have just launched a new platform that we actually call Trade King Live, And it's a streaming platform. It's all written in HTML5. So the concept is that you don't need to have an app for the iPhone, an app for the Google phone. Basically, the HTML5 is one platform, and it works across any type of platform. If you have an iPad, iPhone, Google phone, whatever. So we're kind of getting to the point where you have the same experience on TradeKing relative to anything that or anywhere that you're using or any type of vessel that you're using to actually enter your trade.
Well, that's good, except for me, it would never be the same experience because, on the phone, I can't read anything. But good for you guys. That's outstanding. Mm-hmm. So I know you are, the options analyst there at TradeKing. You drive all the education. Mm-hmm. Tell our listeners about how you not necessarily like to teach, but talk to us about, your beliefs in education in the options space.
Yeah, and
because you're one of the, founding fathers. Honestly, your options playbook is off the charts. You've done so many things. Enlighten our listeners.
Well, thank you. Thank you for that. Yeah, well, one of the biggest things that we've been doing, and actually you just kind of reminded me that we are starting a new company that's going to be called TradeKing Media. And currently, every Monday, Tuesday, and soon to be Wednesday, we do a midday market call, and where we reach out to all of our clients. And you don't necessarily need to be a client to join, and do recommended trades, basically, based off of different charts, different fundamentals in stock. We have a couple other different vendors. Michael Kahn, who's a Barron's columnist, will sometimes use his chart of the day to come up with a stock, and I'll come up with a trade. People like Dan Sheridan have came in and given us some trade ideas. And also we work with another vendor out there that is very near and dear to TradeKing. They have a Trade Now button on their software, and that's with VectorVest. Okay. And they come in every Wednesday and every other Wednesday and actually come up with a swing trade based off of what their software says. So
tell our listeners, some of them may not know exactly what a swing trade is.
All right. Well, as far as the swing trade is concerned, it's mainly just the period of time that we're looking to look at the trade. But it's not a day trade. You're not going to get in and get out. You're just basically looking for some momentum. Plan is to stay in the trade for a week or two, no longer. And their software actually picks that underlying stock and tries to give you an in and an out point.
Okay. And so you said that's on Wednesdays sometimes? I mean,
that's every other Wednesday.
Every other Wednesday. And then you've got Monday and Tuesday each week at 12 noon Eastern time?
12 noon Eastern time,
And they run, they're kind of short snippets, right? I mean, it's short and sweet, about 15 minutes long. Is that about accurate?
Yep, that's exactly it. It's the best 15 minutes you can spend each day.
All right, fantastic. What are the other types of things? I mean, are you interacting directly with clients? Do you oversee, a bigger group? What exactly is your role there?
Well, it's going to be more and more so that once we get TradeKing Media up and running, which is once again an HTML5 platform that we're going to link right into the TradeKing homepage. Okay. And we're going to start a thing called Trader TV. And it's not going to be myself to start, I'm going to be the main focus, I guess. Okay. But we'll have other instructors that will come in, and it'll basically be like a television show about investing. And we're really excited to get that up and running. But I will actually become an employee of TradeKing Media and no longer an employee of TradeKing Securities. So that kind of frees us up to be able to talk a little bit more candidly about the markets and what we think is going to happen next.
Fantastic. And how long do you envision those shows running, on a daily basis?
Well, they're basically, hopefully, once we get up and running, we're going to have enough content to last the entire market, basically from open to close.
Oh, baby.
Yeah. So there'll be a lot of talking. I'll need a lot of water to make it through the day.
Well, that sounds exciting, though. I mean, another form of education. Mm-hmm. And that'll basically be streaming all day long?
That'll be streaming all day long, and we'll have some sessions that will be recorded, so you can go back if you missed something. You can go back and listen to it. And that's probably one of the most exciting things that we've had happen in quite a while. We actually changed our whole corporate structure to be able to get this up and running.
And time frame for that? I mean, it's typically you never can quite be sure, but what are you thinking?
Right, probably about a month.
We right around the corner.
Yep, not that far along. We have our programmers working on the streaming TV part of it right now, but inside the TradeKing Media platform, you're going to be able to. There's a charting platform in there. You can actually snapshot the chart, draw it, send it to somebody else that's inside the TradeKing Media, and they can draw on it and and give their little chats about it and send it back. And then also we'll have the streaming TV opportunity. So it's really going to be, it's going to change the educational environment, period, as far as TradeKing is concerned. We're basically taking our trader network, which we were one of the first firms to ever start with the social media aspect, and it's over 10 years now, Joe, that happened. Yeah.
It seems to have caught on.
Yeah, definitely. So we want to take that and basically, take our education site, and now it's going to be the 2.0 education site, and we're going to call it TradeKing Media.
Fantastic. Well, the way you described it, it sounds incredibly interactive.
Definitely. So yeah, you see a chart, you draw on it, you send it to your friend, and they look at it and they say, no, I don't think the trend line should be here, it should be there, and draw on it, and you can chat back and forth, and everybody else gets to watch, and anybody can chime in that wants to.
Fantastic. Well, I mean, TradeKing is on the up and up. I know you've got lots of clients. Why don't you tell the group, because there may be some listeners out there who aren't familiar with TradeKing. Tell us about the nuts and bolts of TradeKing, how you're growing, things like that.
Yeah, it's kind of scary to think, but by this December, we'll be 10 years old. Mm-hmm. We now have over almost 600,000 accounts and 4.2 billion approximately in assets. So we're becoming a real player out in the marketplace. And with the advent of the TradeKing Live streaming platform and the TradeKing Media, I see the growth continuing. We're opening accounts on a very, very steady pace.
And are there, different things? Obviously there's a lot of competition in the marketplace. What would you say sets you apart, as an entity?
Well, I think the two things, like what we've done in social media really set us apart when we first started the firm. Now everybody's kind of joined in. So we got to take that to the next level. And I think that's where the education and the TradeKing Media is really going to give us another boost. It lets our clients talk amongst each other, and people have the synergies. And if you like what someone else is doing, you can just check a little button and you're following them and following right along. And I think that's the big thing that's going to really drive accounts is the social networking.
That is a great capacity, because it can be, I think, very challenging to bring that capacity of interaction to the screen. That's the benefit of the live events. You're surrounded by like-minded people. You get to talk about things, but to be able to bring these different tools and capacities, to a trading screen is really, that may well set you apart.
Yeah, definitely. And so I see a lot of growth in the future. We're giving the big guys a run.
How about let's take a step back. The last, you guys were innovators 10 years ago in the social media space. Over the last 3, 4, 5 years, have you seen significant changes in the industry? What have you seen, and maybe what do you see going forward?
Well, it's interesting because, we started, we're $4.95 for stocks, and you'd think that.
What's that?
When you're trading stocks as far as commission wise, we're $4.95 for unlimited number of shares of stock.
Okay.
And you'd think that would really drive our accounts, but we see that over 40% of our clients actually trade options.
Well, you're doing a heck of a job on the education side. That's why, Brian. Come on now.
Thank you. I hope that's it. I can't take all the credit though. But so I do see investors becoming more and more sophisticated. So our option volume is increasing right along with our stock volume. And it's kind of weird. We do obviously promote it educational wise, and we try to make people better traders via my book, The Options Playbook, and our website, optionsplaybook.com, and also our education site. But it's really nice to see people using options the right way, the way they were intended to be used to help hedge portfolios, to covered call rating is a very, very popular strategy within our firm, and we see a lot of that nowadays.
That's great. And I think you mentioned two ideas there, the protection side, maybe buying insurance, and it's a question of what you pay, and then generating income. So you tend to, from the educational standpoint, tend to keep it simple. Does it depend on the client? What's your philosophy there?
Well, whenever we do a seminar and we do a basic seminar, that's by far we get the biggest crowd to show up. We'll get 500 to anywhere from 500 to 1,000 people to attend a very basic seminar. But we also go out and, we teach the advanced too, and we'll teach how to roll trades, how to hedge trades, when you want to think about hedging a trade and those type of things. But by far, I think the biggest strategy that we see our clients do is selling puts, cash secured, to buy stock and then selling covered calls once that stock is purchased.
Let's, just for listeners who may be new,
Okay.
why don't we, in a little bit of detail, describe selling that cash secured put and doing that covered call?
All right. So the concept of cash secured means that if you sell a put, you'd obviously know what strike price that is. And we'll make the math simple. So let's just say it's a 50 strike put.
On XYZ, of course.
XYZ, right?
There we go.
On XYZ. That's a good stock, I hear. XYZ, fictitious stock. And if the stock gets put to you, and that's where the term put comes from, that means you got to buy 100 shares at 50. Well, cash secured would mean that you have that $5,000 in your account that would enable you to purchase that stock if it was put to you. And so then on the hindsight, once you get that stock, then a lot of people will go out and maybe sell a 55 strike call and say, if the stock, I own the stock now, and now if it gets up to 55, you can call the stock away from me. So it's just a simple way to generate income above and beyond dividends on stocks that you like.
Very good. And it does seem as though, the retail user base is expanding. And whether it is just because firms like yourself, I'd like to think that, we at the OIC do a pretty good job getting the word out. A lot of firms, basically helping to educate the public and really get through some of these stories about how, options are so risky. Nothing could be further than the truth. I mean, they can be, but employed the right way, as you say, to generate income and a couple other things, they make all the sense in the world.
Well, I find it very, like whenever I teach a basic seminar, one of the first things I always say is, if you came here with the concept that options are used for speculations, you'll never understand options. I mean, they came from the need to insure and hedge underlyings going all the way back to the 16th century with the Dutch aristocracy and tulip bulbs. And the concept of an option was there to hedge and assist a portfolio as opposed to be pure speculation.
Speaking maybe briefly before we wrap it up in terms of the industry. The industry last year had its second busiest year ever, averaging just shy of 17 million contracts a day, 4.3 billion. We've got 12 exchanges, soon to be more. So business is good. First quarter of the year, business down a little bit. There's some headwinds going forward. What do you see, for the industry in kind of a macro picture?
All right. Well, as there's been as far as the advent of the weeklies came out, and the weeklies have been very popular. Almost, I'd say about 30% of our trades per day are done in weekly options. So they are popular, and it's better to have more options than less in general. But one of the things that I would like to see is a little less of the new products that are coming out. I mean, the markets are getting a little bit wide because there's so many strikes and so many expirations to choose from. As a matter of fact, I remember even back in the day we're at the Options Industry Council here, a lot of people were talking about daily expirations. Now that had some headwind, but it's kind of died and gone away a little bit. But those were actually 1 week options, and they were going to expire on a Monday, then on a Tuesday, then on a Wednesday. And I just think that we need to kind of stop. There's enough products out there. Even in extremely liquid underlyings, you'll sometimes see when you have so many expirations, the markets just start to get kind of wide. There's no open interest, not a ton of volume to support all of it.
Yeah. All right. Well, it's always good talking to you. Anything else that you want to bring to the table from a Trade King perspective before we wrap it up?
Well, just want to make sure to keep your eye out for Trade King Media and Trader TV. And it's going to be very exciting. It's going to be free to everyone, not just Trade King clients. So definitely want to check it out once it gets launched in about, let's call it a month. Let's say a month.
That's, you get the gun at your head, 30 days. That's
all right.
That's coming soon. Well, Brian, and for you listeners, Brian's book, The Options Playbook, is absolutely a spectacular, crystal clear explanation of various option strategies. So if you're not familiar with it, do check it out. And Brian, thanks so much for joining us today on Profiles and Perspectives.
Thanks for having me, Joe.
It's time to upgrade your options toolbox with cutting-edge trading platforms, devices, and information. It's time for tools, resources, and good reads.
In Tools, Resources, and Good Reads today, we're going to offer the VIX, the measure of implied volatility of the S&P 500 as today's tool. The VIX is often referred to as the fear index. Again, the VIX, it's the market's expectation for the stock market volatility over the next 30-day period. That's the VIX. So it can be a tool just to give you a gauge for as the VIX goes up, typically the market is going down. As the VIX goes down, typically the market goes up. One thing to note, though, that trading the VIX can be a bit of a sophisticated endeavor, so be sure you've done your homework before you dive into trading VIX options. The resource I'd like to urge you to check out are the exchange websites. You'll be pleasantly surprised at the educational content offered on many of these sites. And lastly, today's good reads come from our friend at the Chicago Board Options Exchange, longtime instructor Jim Bittman. Please check out one of his 3 books or check out all 3. Options for the Stock Investor, Trading Options as a Professional, or finally, Trading Index Options. That's it for today's tools, resources, and good reads.
It's time for a nostalgia break. It's time to take a look back.
In today's Looking Back, we're going to look way back. Option expiration, June 1982. By the way, in 1982, the Dow was about 800. And if you remember, the market bottomed a few months later in August of 82, just below that 800 level. But back to the option expiration. I don't tell too many war stories about floor trading on My World of Options, but this is one I will always remember. It was Wednesday before June expiration. City Service, an oil company, was a perennial takeover candidate. So the stock traded up and down on rumors, and this is how it just moved, month after month. Ever-changing volatility levels, everything you like in a great trading stock. As we got to close to 4 o'clock that Wednesday before expiration, brokers came racing into the crowd trying to buy City Service June 40 calls. So it's Wednesday, it's basically 3:58, 3:59, expiration's Friday at 4 o'clock. The stock's trading 37 and 5/8, and we got brokers flying into the crowd, half bid for the June 40 calls, half bid. Okay, so the June 40s are $2.50 out of the money. We got a couple days to expiration. 9 steams bid for June 40s, and boom, the bell rings. The customers represented by the brokers in the crowd, bought a couple hundred of these things. Lo and behold, shortly after, the bell rang, I don't know, it's probably 5:30 that night, an announcement was made that Gulf Oil was buying City Service for $54. So it was an interesting Wednesday night, to say the least. We sat around Thursday waiting for the stock to open, and City Service never opened. We got to Friday morning, and here we are. It's expiration week. What's happening to these June options? We go back to 1982, we had the monthly option. So it was the 3rd week of June. No such things as weeklies back then. We get to Friday morning. City Service doesn't open. We're all standing around saying, what is going on? Lo and behold, all day long, we stood around waiting for City Service to basically open so we could price those options for expiration and then trade them. Well, as the day wore on, we heard that it sounded like City Service, may open, but it's going to open, fairly close to the closing bell. And as it turned out, City Service opened right as the market closed. There was a $54 print. And my recollection is that was it. Stock trades at 54, market closes, and then option expiration really began for us. Now, this is in the days where there was no electronic trading. Again, we're talking 1982. So we started with what's called option rotation. And we went through every call, every put. We started about, 5 after 4. And again, this is back in the days where, everything was paper traded. So we had, stacks of paper for orders that were literally 12 inches high. And we did our best to get through that. We got through our first rotation about, my recollection is 6 o'clock, 6:15, trying to get, all the buyers and sellers matched up. We finished about 6:15, and we knew that there were still outstanding orders. So as it turns out, we did a second rotation and got through all those option orders. It was about 7:25 at night. And, the buyers got matched with the sellers. The June 40 calls were obviously now worth $14. And it was an absolutely remarkable time. And, that's a war story from the old days in today's looking back. Hope you enjoyed it.
You've been listening to the Options Industry Council's Wide World of Options. If you have questions about anything you heard on today's show, email Joe Burgoyne at options@theocc.com. Or you can call OIC's Investor Services at 1-888-OPTIONS. Interested in connecting with OIC on social media? Like the OIC page on Facebook. Follow them on Twitter at options_edu. Or join their group on LinkedIn. Thanks for listening, and be sure to check out our next episode of The Wide World of Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.